Hello, Ramayan. From this video, I'm discussing 2019 annual accounting paper, first paper discussion from question number 1 to question number 50 with workings. And please do share with your friends as well. First question they're asking, which of the following statements best describe the main purpose of accounting in a firm? So the most suitable answer is communication of information for decision making of a stakeholder to the stakeholders of the firm. Second one, they ask me what is the correct sequence of following steps that take place in accounting process. So from these steps, first of all, you have to identify transaction through source documents, and then you have to post into the prime entry books, and then you have to post the summarized information from prime entry books to the ledger accounts, and then you have to balance the ledger account, and after all, you have to prepare the trial balance. So the correct sequence should be number 2, the second answer. And to answer question number 3, 4, 5, you have to go with this case study. And as like in this question, first of all, read down the question and then come back to the case study. So in the third question, they ask in the source documents used to record the above transaction with Jayamal traders in the books of Southern's business in order of their occurrence. Right? So they're asking from Southern's point of view, right? And the transaction that they did only with Jayamal traders, right? So here this is the investment and then purchase goods 500,000 on credit with Jayamal traders and it should be what purchase invoice and then returned back to Jayamal traders and it should be a debit note and then yes and then you are settling to the Jayamal traders act. So when you are answering for the third question you should not consider the third one here because this is the transaction that happened with cinema, right? They are asking the source documents only that relate to the Jayamal traders transaction, so which means the transaction that you did with Jayamal traders. And the last one, settle the balance due to Jayamal traders with the subject to a discount of 5,000, so which means the voucher. And the correct answer for that is number 1, invoice, debit note, and the payment voucher. Fourth one, in fourth question, they are asking the order of the prime entry books used to record the transaction that took place in Sabun's business from 12/1/2019 up to uh, 24/1/2019. And first of all, it is a cash investment, and that cash investment you had to record in uh, is cash asking 12. Ah, no, yes. Here they asking they are asking the transaction from 12/1. No? So when you are answering that, you should not consider the initial investment and here the first transaction as well. You have to get the transaction here, the second one, third one, and only the fourth one. Okay, so return 50,000 to the goods purchased from Jayamal traders. It should be in return outward journal and sold good costing on cash kilakivoma, cash receipt journal, and the settled balance, it should be cash payment journal. So the correct answer should be second one, purchase return, which means the return outward, cash receipt and cash payments. That's a good one. That's a tricky one. What is the profit of for the month of Jan 2019 and the cash balance as at 31st March 2019? So here the sales is 600,000 and the cost of sales that relate to those sales is 400,000. And you can find out the gross profit, but they are asking a profit. So then to that you have to add the discount received that you are getting from Jayamal traders. So your profit should be 205,000. And when you are finding out the cash balance, you have to consider the capital investment at the beginning, 750,000. And then the sales you are receiving 600,000 and the creditor payment. That remaining amount you should pay to the, you're paying here to the Jamal traders. And that creditor payment you have to deduct when you're finding out the cash balance. So the correct answer for question number question number 5 is answer number 5. And for question number 6 and 7, they're asking from this case study. In question number 6, what is the following accounting equation reflects the effect of the above transaction in someone's balance as in 31st March 2019? Right? So here the salary payment, the net salary payment you have to minus from assets, and the EPF that you are retaining from that gross profit 50, you have to pay back to the government. And here these all EPF and ETF are paying on the 10th of the following month. So which means the EPF reduction that you make from employees' gross profit, it is a liability for you up to closing date because those EPF contribution that you collect from the employees, you are paying back to the government in the next month. So until that, it's a liability for you. But the total gross salary you should consider as in your expense. So it should be minus from equity. And the EPF contribution that made by the company is also a liability, plus it is an expense as well. So it should deduct it from equity. And then the ETF as well. So ETF is a liability because those EPF, ETF, all things you are paying in the following month, and the EPF contribution done by the employer and the ETF contribution done by the employer, both you should consider as an expense, right? So it should minus from equity. So the correct answer for question number 6 is answer number 2. And in question number 7, they are asking the double entry, the correct double entry to record the EPF expense and EPF liability. So the correct answer should be EPF expense debit and salaries and expense debit. And the total you should credit to the EPF payables. So here the EPF expense is what? The EPF contribution done by the employer. And here the salaries and expense is what? The EPF contribution done by employee. And both those contributions you have to credit to the EPF payable account. The correct answer should be answer number 5. Pick one, which of the following statement is true in relation to application of accounting concepts? So the correct answer should be number 1. We'll see. The basis to show the dividends paid to ordinary shareholders as a deduction from the retaining profit, it should be entity concept. That's correct. Because the dividend payment means shareholders getting the share of profit. So which means that is in other way around, you can consider that as a drawing, right? So drawings you should not consider as an expense. You should be considered as the deducted from the equity, right? And the others are wrong. The basis to classify income receivables as current assets in SOFP is provided material. That's incorrect. It's provided by going concern concept. The basis to recognize discount received from creditors as an income is provided no matching. Expenses are backing from matching concept, but the incomes are backing from realization concept. The basis to recognize discount allowed to debtors as an expense is provided by the realization concept. That's totally incorrect. As I mentioned earlier, the expenses are backing from matching concept. The basis to recognize contingent liabilities as a liability in SOFP is provided by pruders. That's incorrect because you are not recording contingent liabilities as liabilities in any way. You are recording provisions in in SOFP based on prudence, but not for the contingent liabilities. Right? Which of the following accounting concepts provide to the basis to recognize inventory at the lower cost? Prudence and matching. Tenth one, the entire inventory of the firm was destroyed as in closing date for fire and occurred in stores. Following information has been provided. Opening inventory given, purchase return, sales and sales expenses. And then the firm sells goods with a markup of 20% on cost. You can here go for the trading account, sales and under cost of sales, opening stock purchases purchase returns but you don't know here what the closing stock, right? But the markup is 80%, so which mean, sorry, 20%. So which mean the cost of sales is equal to 100% and the gross profit is equal to 20%. So if so, your sales should be 120%. And in this case, sales are 2,400. Then 2,400 is equal to 120. Then you can find out cost of sales, right? Up to this point, after recording all opening stock purchases and purchase return, up to this point, the stock uh, that you presented for the sales is 2,250. But from that, you only sold 2,000 worth of stock. So which means your closing stock is 250 and 250 is the cost of inventory destroyed, right? But from that, insurance claimed 80%. So the stock damage that you used to bear after claiming the insurance is 50. So your correct answer should be number one. The stock destroyed is 250 and the stock loss is 50. All good? You have to answer question number 11 and 12 from the following case study. And then they're asking the adjusted admin expenses and adjusted distribution expenses. So the drafted admin expenses and drafted distribution expenses are given. And what are the errors that they did is office staff salaries 30,000 and sales commission 20,000 payables they not considered in accounts. So the payable office staff salaries you should add it to admin expenses and payable sales commission you should add it to the distribution expenses, right? And then prepaid building rent 40,000 has been included as in admin expenses. So that prepayment you have to consider as an asset and you have to deduct from expenses. So that prepaid amount you have to minus from admin expenses. And then what they did, the motor vehicle depreciation 50,000, they recorded in distribution expenses as in the normal way. However, these vehicles are used to provide transport facilities to the office staff. So if they given a specific purpose like this, then that specific purpose, which means transport office staff, it should be added to the admin expenses, right? Then you can find out the adjusted admin expense and distribution expenses, and then after that, you can get the net profit. So the gross profit is given 850. From that, adjusted admin expenses and adjusted distribution expenses, and there is nothing changed for the finance and other expenses. Most of the students they didn't get the finance and other expenses when they are finding out the net profit. Right? So your correct net profit should be 265. In 13, prime cost and the total production cost of a manufacturing business for the year ending 31st March 2019 was 900,000 and 1,600 respectively. And the work in progress inventories which were measured at the production cost. And then they ask the production OX. Yes. So your prime cost is 900,000 and the total production cost is 1,600. But this is after you adjusting opening work in progress and closing work in progress. So by recording like this and then go back to the reverse and then you can find out the production overhead. 14, they given from the non-for-profit organization A welfare society had 150 members during the year ending 31st March 2019. The annual subscription per member is 2,000, and the cash received for the society during the year ending is 31st March 2019 were as follows. What they ask is income recognized and the increase in assets. So here the subscription for the current year 200,000 and donation 250,000. These are the cash receipts. But when you identify the income, you have to identify 150 members into 2,000. So that is your subscription income. And the donation here, 250,000, they asked to recognize in income statement within 5 years. So the donation here, the income should be 50,000. Proceeds of the fixed deposit matured on 31st March 2018. So this 31st March 2018 is not recognized to the income for this year. This is an income that relevant for the last year, not for this year, right? And the policy of the welfare society, yes, we consider that, and your total income is 300. So most of the students they recognize the 60,000 interest income is the income that relevant for this year. That's incorrect. You are starting this year from 1st of April, right? And the increase in assets, cash received here 1,010,000, altogether 200, 250, and 560. And from that, we have to reverse the interest income receivables, 60,000, and that FD written off. So your increase in assets are 550,000. 15.1, they are asking the correct statement based on partnerships. The goodwill of the partnership is estimated when its profit sharing ratio is changed. Yes, it should be adjusted, estimate. And the goodwill of the partnership is estimated as per section 42. That's incorrect. In section 42, it says about the interest that you should pay for the loan that they kept by the retired partners. So partners are not entitled to a salary. That's correct. Drawings can be used as a meaning of withdrawing profit. Yes, that's also correct. An interest of 5% should be payable on the partner's capital balances as per section 24. No, that's it. So for question number 15, the correct answer should be number 2. Okay. Into question number 16 and 17, they given the big informations about the partnership. And then they ask in the goodwill of the partnership and the impact of the goodwill. But I think before that, you have to prepare the current account, I think. Yes. Because there is a retirement that happened in Raju. And before that retirement record in Raju's capital account, you have to find out the Raju's closing current account. And to that balance and the profit you have to distribute based on the agreement. And the Raju's current account closing balance is 200. And that current account closing balance 200, you have to transfer from current account to the capital account. Then you can adjust the goodwill. And here it says what? Earn the profit and the retired and the loan amount is given 1,500. So from adjusting that Raju's 1,500, you can find out the goodwill portion to Raju. So that is equal to 1 out of what is the old ratio? 3 to 1. So that 300 is equal to 1 out of 6. So your total goodwill then should be 1,800. Okay. And to find out the net impact for Manu, Madhu's equity is increased by 900 and decreased by 1200. So, which means the net effect to Madhu is a decrease of 300. But for Niru, nothing happened, right? So, to get those answers, you have to go with these workings. 18.1, they're asking what? The correct statement based on LKS 8. Accounting policies are the specific principles, blah, blah, that's correct. Changes in accounting estimates arise due to the new information, that's correct. Prior period errors are corrected retrospectively only if they arise with the respect to measurement of elements. If you can adjust those, then you can adjust. So the correct answers only there are A and B. They asked a lot of things from LKS for here the 2019 paper. 19, which of the statements is correct as per LKS 16? Depreciation is the systematic allocation of depreciable amount of yes. And depreciable amount is the cost of the other account substituted for the cost of asset. Receipts, correct. Useful life is the period over which an asset is expected to be available for use by an entity. Correct. In the 20th one, Nethu PLC imported a machine on 1st of March 2019 for use in the production by paying 2 million. Following expenses were also incurred by the company in this respect, and then they asking the cost of the machine at as per LK 16. And I think this is before update of the that cost of initial test run. Yes. Here, the site preparation you should add it to the cost, and charges to connect power supply to the machine you should sorry, you should add, and the cost of initial test run. Uh, this is before the update. But now, as per LK 16, the new update, you are not adding the cost of initial test run to the cost of the machine. You should consider that as an separate expense under other expenses. But in here, this is before that update, so that's why the cost of initial test run is added. And license fee you should add, right? In 21, they are asking what are the should be adjusted as per LKS 10 events after the reporting period. A trade debtor who owned 500,000 as in 31st March 2019 was declared before authorizing the financial statement, so it can be adjusted. Value of investment of shares increase or decrease, you are not considered, which means you are not adjusting for the financial year. The judgment of the court case which had been filed against the company. So this is filed against the company after the financial year. So that is not relevant for the considered financial year. So the correct answer should be number 1. You are only adjusting only the transaction A. 22, as per LKS 2, they are asking which of the following cost of items are included. Uh, are not included. All these three are not included when you are identifying the cost of the inventories as per LKS2 inventories. A big question, right? For 23 and 24, you have to consider these information, and then in first thing they ask you the total income. So turnover is the income, and the revenue surplus of land is an income, and the revenue surplus of motor vehicle is an income. And total expense, the difference between turnover and the gross profit is your cost of sales. That cost of sales you should consider here as in income, sorry, as in expense, and then the admin and distribution altogether 250 the expense. So the total income and total expense you can find out like this. But when you're finding out the profit for the year and the other comparator, you have to consider the last year's revaluation, surpluses, deficits, and the written off all those cases, right? Revenue, cost of sales, gross profit, and admin and distribution expense. Up to that point, that's all okay. But here, In this year's revaluation, surplus of land is 150, and land was revalued for the first time. And so here the land revaluation happened as in first time. So this land revaluation surplus you can directly record it under other comprehensive income. For the motor vehicle, this motor vehicle revaluated for the second time in this year, and from the last time it is a deficit. So from this year's surplus, you have to written off the last year's deficit, and that is you should add it to the profit, because when you're writing down the expenses, so which means that should add it to the profit now. And the remaining amount is the amount that you have to mention on the other comprehensive income. So your profit is 685, and the other comprehensive income total is 190. 25th one, current ratio, current liabilities, and inventories are given, and then they are asking the inventory turnover ratio. And how to find out the inventory turnover ratio? Cost of sales divided by average inventories. And here, sales are given as 300,000, and the gross profit ratio is 20%. So, which means 80% is your cost of sales. Right? So, gross profit ratio means the gross profit based on sales. And if the gross profit is 20% based on sales, the difference of that is your cost of sales. And cost of sales is 80%. So 300,000 into 80% is your cost of sales. And to find out average inventories, the opening inventory plus closing inventories divided by 2. That's easy. And then they ask in the quick assets ratio. To find out quick assets ratio, you have to deduct the inventories from current assets. And here the current assets is 120 because the current ratio is given as 2 and the liability is given as 60 times. So 60 into 2, your current assets is 120. And to find out the quick assets from the current assets, you have to deduct inventories from the current assets. So your quick assets is 72. And to find out quick ratio, quick assets divided by current liabilities. So your quick ratio is 1.2. 26. This is very interesting. They are asking the return on equity ratio calculated for Saman PLC for the year ending is 20%. And then they are asking what are these transactions will lead to increase. So first of all, what is the return on equity ratio? Return on equity ratio means the profit based on equity. Right? The percentage of profit based on equity. And let's assume that you are, because the return on equity is given as 20%. So let's assume the equity, if the equity is 1,000, and then your profit should be 200. Okay. And from the first thing, surplus of 500,000 that resulted from the revaluation of building for the first time. And because of that revaluation surplus, there is nothing affecting to the profit because first time revaluation surpluses you are recording under other comprehensive income, and that is after profit. But the revaluation surplus you should credit to the revaluation of reserves, so which means your equity is increasing, and because of the first transaction, there is nothing changed for the profit, but your equity is increased by 500, and your ratio is 13.33. Right? These are the assuming amounts, right? B, capitalization of reserves, there is nothing changed. So the capitalization, because your return earnings goes down and your stated capital is increasing, so nothing changed for the equity and nothing changed in the profit as well. So still the ratio is 20%. But for the last one, return outwards 200,000, and because of the return outwards, your profit should increase by uh, yes, profit is increased by 200 and your equity is also increased by 200 because profit is added to the equity. Right? So 400 divided by 1,200 into 100%. So the ratio should be 33.3, and that is uh, the answer. Only C. Okay. 27th one, Amal PLC produces and sells 50,000 units of a product annually. They ask you the total cost per unit and variable cost per unit, right? So prime cost is 20. Manufacturing overheads, they given the total 2 million, and that's for 50,000 units. So 2 million divided by 50. The manufacturing overheads per unit is 40, and non-manufactured overheads is given as 1,500,000, and that divided by 50,000 units, it's 30. So the total cost per unit here is 90. That's much easier, right? And to find out the variable cost per unit, yes, it's given from the total overhead, 60% is variable, sorry, fixed. So then, which means the other 40% is variable, right? So first of all, you have to find out the overheads per unit, right? So 2,000 plus 1,500 altogether 3,500, and 3,500 divided by 50 means overheads per unit is 70. And from that 70, 60% is fixed, so which means 40% is variable. So it's 28, and to that you have to add the prime cost per units. So the total variable cost per unit is 48. 28, a company that produces a single product has two production department X and Y, and they are asking the production overheads per unit and the cost of production per unit. So here production department X, production overheads 200,000, and required number of hours is 10,000. So I think 200,000 divided by 10,000, production overhead absorption rate in production X is 20. It's very much easy, right? And for Y, 150,000 divided by 30, the overhead absorption rate is 5. So the cost of production, direct material 50, and direct labor, it contains 4 hours to produce, and 50 per direct labor. So 200, and the prime cost addition of those 250. And to that, these overhead absorption rates, you have to multiply by the what in production overhead X, you have to multiply by the machine hours, and then from Y, when you are absorbing, it should multiply by 4 labor hours. Then you can find out the cost of production. This is very much easier. 29, which of the following statements are correct as in break-even point? So break-even points, there is no any loss or profit. So which means total cost is equal to total revenue. And also it means the total fixed cost and the total contribution is equal. Because if it is a profit is zero, you're finding out the profit by deducting the total fixed cost from the total contribution. So if the profit is zero, then which means your total contribution and fixed cost is equal to each other. Let's see. Yes, this is what I mentioned here. Contribution is equal to the total fixed cost. That's correct. Sales income is equal to total fixed cost. That's incorrect. The sales income is equal to the addition of fixed cost and variable. Sum of the total fixed cost and total variable cost is equal to this is correct. And fixed cost per unit is equal to the variable. That's incorrect. So only the second, A and C. Right. Last MCQ, the net present value of the project is 800, and which of the following would lead to decrease in the NPV value? Decrease in the discount rate. Because of the decreasement, your present value of uh, future receipts are increased. So because of that, your NPV is increasing. Increase in the initial investment. Because of that, it should be decreased. You can't find out the NPV first of all. Present value of future cash flows, the total of present value of future cash flows minus initial investment. Decrease in net operating cash inflows. Because of that, your present values is in decreasing as well. First of preparing the project report. Project report is nothing to do with anything because for the NPVs, because that project reporting cost is a sunk cost. So you are not considering sunk cost when you are getting the cash flows in investment decisions. So the correct answer should be number two. Okay. So now let's move for the other part from 31 to 50. In 31st question, you have to state whether true or false on following statement based on management accounting. So first thing it says prepares general purpose financial reports for the use of managers. You are preparing general purpose financial reports for financial accounting, not for the management accounting. So that's false. And prepares financial reports in compliance with accounting standards. You are preparing financial reports based on accounting standards, rules, acts, and the concepts for financial accounting, but not for the management accounting. Provide both past and future information. So future information means the estimated information. So that's a true statement. And then generate information on demand of the managers of the business. So that's also a true statement based on management accounting. And here, from these following transactions, you have to consider whether that is an increase or decrease for the equity. So if it is increase, you have to mark a right mark or wrong mark, right? So first transaction, sold goods costing 50,000 for 80,000 on credit. So there is a profit, right? 50,000 to 80,000, and there is a profit 30,000. So because of that profit, your equity is increasing. And then owner provided an equipment worth 200,000. Yes, of course, it is an additional capital to the business. So because of the additional capital, your equity is also increasing. And then owner paid a loan installment 30,000 of the business from his personal money. So this is another way of providing capital to the business, because the payment that had to done by the business is done by the owner's personal money. So it is also an additional capital that invested to the business. Received a cash discount of 5,000 when a creditor was settled. So this is a discount received, and discount received is an income. So because of incomes, your equities also should increase, right? 33, state the most appropriate accounting record that is described by each of the following statement. First statement is the full list of accounts with their balances on a specific date. So this should be the trial balance, right? You are identifying transaction through source document, and then you are recording that in your prime entry books. And the summarized information of prime entry books you are posting to the general ledger. And after that, you have to balance each account, and then the closing balances of each account you are presenting from the trial balance, right? This record that contains the collection of accounts is general ledger, and the document that records the movement of the balance of an inventory item, it can be store ledger or bin card. You are preparing store ledger either FIFO method or WAC method, right? And the book of account that records a particular category of transaction in the chronological order, it should be the prime entry books, right? 34, the trial balance of a business as at 31st March 2019 did not balance, and the difference was transferred to a suspense account, and then the errors were revealed as like this. So they are asking to write down the journal entries to rectify the above errors. First error, the total of sales journal for March 2019, 540,000 has been posted to the debtors control account and sales account 450,000. So that transaction, that error that happened for both data control account and sales account. So what the error that done here, you record as sales underestimate, right? So the difference of that 90,000 you have to debit to the debtors control account and credit to the sales account as well. Second error, the discount allowed 10,000 to the debtors has been debited to discount allowed account as a 1,000. However, this amount has been correctly posted to the debtors control account. So there is nothing to correct in debtors control account. That error happened only for the discount allowed account. So what happened here? The total amount is 10,000, but they recorded 1,000 as in debtors uh, discount allowed account, right? So the difference of that, you have to again debit to the discount allowed account and then credit to the suspense account. 35, there are accounting treatment, and then you have to write down the accounting concept that relates to that. Making a provision for warranties provided on goods sold, the base accounting concept for that is prudence concept, and recording a building obtained on lease as an asset. In lesser's books, it should be materiality concept, not materiality, right? It should be substance over form concept, I think. Yes, it should be substance over form concept. Materiality concept is not like that. Recorded depreciation as an expense, so matching concept, and presenting assets as current and non-current in the statement of financial position, it should be going concern concept. I already uploaded the video that discuss the all 13 concepts into my YouTube channel. Right? You can watch and learn about the concepts. Well, let us say, state whether the following statement relating to a sole trader business are true or false. The sum of capital investment and retained earnings is equal to equity. That is right. In the sole trader business, the sum of capital investment and the retained earnings is the total for the equity. The income statement is not prepared on accrual basis. That is totally incorrect. You are preparing income statement based on accrual basis, not cash basis. Whether the incomes are received in cash or not, or whether the expenses are paid in cash or not, that doesn't matter. In income statement, you have to record the all incomes and expenses that are relevant for the year, right? The drawings are recognized as an expense. That's also incorrect. Drawing is an Yes, drawing is a decreasement of the equity. It is not an expense, right? And it is not useful to prepare management accounting reports as the business is operated by the owner. That's also incorrect statement. So whether it is a sole proprietorship or not, or let us say that you are doing a very small business. So that doesn't matter. You need management accounting things, right? You need to estimate the future sales and cost and the raw material purchases. You have to always estimate, right? So management accounting is everywhere. Right? So it is a false statement. In 37, they are given the total assets and total liabilities as at close in date to the Amal traders, and then they are asking the equity. So equity is equal to the difference of total assets and total liabilities. So your equity is 1,100,000. And from those information, they are asking the profit. So how to find out the profit? The difference of opening and closing equity. And to that, you have to add drawings and minus additional capital. So your closing equity, we found here 1,100,000. And the opening equity is given in here 800,000. And the difference of that is the change of the equity. So your change of the equity is 300. And then uh, that the effecting transactions to change in equities, income, expenses, drawings, and additional capital. So you need to find out the profit from the change in equity. Then you have to reverse the effection of drawings and additional capital. So that's why you have to add here drawings and then minus additional capital. So you can find a profit as 100,000. In 38 and 39, you have to answer from this case study. It's about what? Anand and Jayant carried out a partnership without a written agreement. And on 1st of April 2018, Anand paid 250,000 for the insurance premium of the motor vehicle of the partnership using his personal money. However, this has not been adjusted when preparing financial statement of the business ending closing date, and the partnership reported a profit of 562,500. And later it was decided that this amount is to be recognized as a loan provided to the partnership by Anand. So then they ask you write down the journal entries to recognize the insurance premium of partnership paid by Anand and then the interest payable to the Anand. Right? So here, this is an expense for the from the business point of view. So income statement or the insurance account should be debit, and that investment to that insurance payment, they asked to consider that as a loan provided by Anand. So the loan account should be credit to Anand as in Anand's loan account, 250,000. So when it's provided the loan by the partner, additional to the additional capital, then to that loan amount you have to find out 5% interest as in as based on 1890 Partnership Owners Act. Because at the beginning it says there is a no written agreement, so you have to do the accounts based on 1890 Partnership Owners Act. So in there, they ask to give 5% interest for the additional loans provided by the partners, right? So this payment done on 1st of April 2018. So which means the loan obtained on 1st of April 2018. So you have to find out interest for the full year. And to that 250,000 into 5% is 12,500. And that is an expense. So interest expense debit. And that interest expense you have to pay to Anand. So Anand's current account should be credit as 12,500. Right? And 40th one, state the four enhancing qualitative characteristics based on the conceptual framework for financial reporting. So these characteristics you can divide it up to two main things, fundamental characteristics and enhancing characteristics. And there are two fundamental characteristics, relevance and faithful representation. And the enhancing characteristics are comparability, verifiability, timeliness, and understandability. Right? 41, Manil PLC bought a machine on 1st of April 2015 for 1 million. On this day, its useful life and the residual value were estimated as 5 years and 100,000 respectively. A main component of this machine was modified on 1st of April 2018 by incurring a cost of 280,000. And on this date, it was re-estimated that the remaining useful life of the machine as 4 years and its residual value as 180,000. So when they're given the remaining useful life, to find out the current year depreciation, you have to first get the carrying amount. And that carrying amount, then you have to divide it by the remaining useful life, right? So to find out the carrying amount, you should know the accumulated depreciation from 1st of April 15 to 1st of April 18. So as in the previous information, the cost of the machine is 1 million and the residual value is 100,000. So 1 million minus 100,000 is your depreciable amount 900 and 900 useful life 5, then it's 180. So from 1st of April 15 to 1st of April 18, there are 3 years. So 180 into 3 years, the accumulated depreciation at the renovation date is 540, right? So carrying amount before renovation is 460 and the carrying amount after renovation is 740. And then from the 740, the new residual value you have to minus 180, and that you are finding out the depreciable amount, and that depreciable amount you can divide it by the remaining useful life 4 years. Then you can find out the depreciation for this year, right? So they ask you the depreciation for this year as 140, and then after you deducting from the previous carrying amount, the carrying amount as in closing date is 600. In a 42, select the correct item indicated in here to as per in characteristics of provisions and other liabilities as per case 37. So provisions, contingent liabilities, and contingent assets. Here the first thing is existence of present obligation in provisions years, in other liabilities is years, but to amount payable and the timing of settlement for the provisions is uncertain. But for the other liabilities, yes, it is certain. So in 2019 paper, they asked a lot about from the LKS theories, and here they are asking the when to recognize revenue of an entity, and then definition of the transaction risk. So here these theories, these statements, you have to answer correctly because as like in these questions, you can't answer from your own words. You have to at least give the give your answers with some wordings from those standards. Right? So keep in mind there are very few theories that you have to memorize in accounting. So this is one of them. Okay. 44, the following balances were available in Nilu PLC as in opening day. So the stated capital is 2 million and the retained earnings is 800. And on 30th 9 2018, the company capitalized 400,000 of retained earning at a consideration of 20 per share. And on 31st December 2018, the company made a right issue of shares at the rate of 1 share per every 12 shares held on this date, consideration 10. All rights have been subscribed by existing shareholders, and the profit for the year ending 31st March 2019 was 300,000. So they're asking the increase in the cash balance due to above share issues. So here the stated capital is 2 million and the retained earnings is 800,000. And the number of shares at the previous stage is 100,000. And then on 30th September, they capitalized 400,000 of retained earnings at the consideration of 20, right? So which mean state capital is increased by 400,000 and retained earnings is decreased by 400,000 and the number of shares in there is 20,000, right? And at the right issue, up to right issue, the previous number of shares is 100,000 and after capitalizing, now you have 120,000 shares. And the right issue ratio is 1 share per every 12 shares. So which means 120,000 divided by 12, it uh, should be issued 10,000 shares at the right issue. So 10,000 into 10, your stated capital should increase by 100,000. So they're asking increase in the cash balance due to the above share issues, and it should be only the right issue about 100,000. Because from the bonus share issue, there is no any cash flow because you are issuing shares by using your retained earnings, right? And then they ask the equity. So your stated capital closing balance is 2,500,000, and after adding profit to the retained earnings closing balance is 700,000. So the total is 3,200,000. 45, they are asked to state whether the following statements are true or false with respect to the accounting ratio analysis of a firm. A high inventory turnover ratio indicates a low stock precedence period. That's correct. Collection of money from debtors leads to decrease in the current ratio. No, nothing happened in there. Because when you are collecting money from debtors decrease and the cash increase, and both those assets are considered when you are finding out the current ratio. A high interest cover ratio indicates a low repayment ability of loans. No, it is the other way around. If you have the high interest coverage ratio, so that indicates the high repayment ability of loans, right? And the valuation of year-end inventory at net reserve value has an impact on gross profit ratio. That's also incorrect because when you're finding out the cost of sales, you are considering stock at the cost, not for the net reserve value. So there is nothing changed that happen to the gross profit, whether the net present value is increase or decrease, right? But when it comes to the net profit, yes, when it comes to net profit, then that is if get effective. Because if it is a net realizable value is lower than your cost, you are getting the stock written off under other expenses. Got it? Okay. 46, the following information related to the product traded by a company. So as in opening day, there are 1,000 units at three per unit. And then you are purchasing 1,500 units at 4. And again purchases 500 units at 6. And then you sold 2,000 units at 10 per unit. So they're asking cost of goods sold for month of July 2019 based on FIFO and VAT. And also they're asking the closing inventory as in closing date as per in FIFO method and weighted average cost method. Right? So when you find the cost of goods sold, you sold only 2,000 units. So when it comes to the FIFO method, there were 1,000 units at 3, and again you can sell 1,000 units at 4, right? So the remain unsold stock is from here 1,500 units you sold 1,000, so which means remain unsold 500, and the purchases that you did on 12/7 is also still unsold, and that should again calculate for closing stock as well. So your cost of sales is 7,000, but your closing stock is 5,000. But for the weighted average cost method, you have to get the total value of the units and then divided by number of units. So the total value is 12,000 and the number of units is 3,000. So the issuing amount is 4, right? So cost of sales should be 2,000 into 4 and closing stock should be 1,000 into 4. Here in 47, a company uses the economic order quantity model to determine the reorder quantity of the material used in its production process. So the following information is provided. Annual demand, annual total ordering cost at an order size of 8,000 units. So they given the total ordering cost. So to find out the EOQ, you should know cost per order. And if the annual demand is 40,000 units, and if the order size is 8,000 units, the number of orders, if order size is 8,000, it should be 5 times, right? And here, the total ordering cost 5,000 is given for 5 times, so which means ordering cost per order is 1,000. And after you find out the ordering cost per order, then you can find out the EOQ. So under square feet, 2 into D into CO divided by CH. 2 into and demand and cost of order divided by cost of holding. Then you can find out the EOQ as 4,000 units. In 48, the company has two production department and a service department, and the budgeted overheads of the service department is 100,000, which is redistributed between the production departments based on the number of machine hours worked. Following additional budgeted information is also given. So, yes. And here these distributed overheads is given before, yes, before recording that service department, before distributed that service department overheads. So 120 divided by 3 is 40 in production department 1 production absorption rate per hour. And in production department 2, it should be 140 divided by 2, which means 70. So the 70 is the production department 2 absorption rate that they already found out. So go back, right? Then you can find out the distributed overheads up to that point for the production department 1 and production department 2. Right? So the drafted production overhead absorption rate is here 40 and 40 multiplied by 7,000. The production department 1 drafted overheads are 280,000. And for the production department too, the drafted overhead absorption rate is here 70, and that 70 multiplied by the machine hours. The production department two drafted overheads are 210,000. And then the service department total overheads 100,000. You have to redistribute between production department 1 and production department 2 based on machine hours. And here the machine hours given as 7,000 and 3,000. So which means 7 out of 10 and 3 out of 10 for production department 1 and production department 2. So after distributing the service department, then you can find out the adjusted overheads for the production department 1 and production department 2. And that again you have to divide up by the number of machine hours to find out the adjusted absorption rate for production department 1 and production department 2. Then you can answer out these questions. Right? For the ninth question, they given from CVP analysis. Following information relates to a 3-hour seminar organized for a competitive examination. And here this is 3-hour seminar, and then they are asking contribution per participant, fixed cost of the seminar, and the number of participants required to cover the total cost. So first of all, you have to find out the contribution per partnership. To find out that, you have to get the variable cost first. So here, there is a only variable cost is lecture material expenses per participant 500. And the seminar fee is 1,500. So how to find out the contribution? Selling price minus variable cost. And selling price is the seminar fee 1,500 and variable cost is 500. So your contribution is 1,000. Okay. And then when you are calculating fixed cost, you have to go for 3-hour cases because here the whole charges and lecture fees are given for per hour. And those per hour amounts you have to multiply by 3 hours. And then to that you have to add advertising fee. Then you can find out the total fixed cost. And now it's easy to find out the break-even point. The fixed cost you have to divide up by contribution. 50th one, the last one. A company is considering to purchase a machine for use in a new project at a cost of 900,000. The useful life of the residual value of the machines are estimated as 5 years and 100,000 respectively. The expected annual profit of the project is 200,000 and its only non-cash expense is depreciation. Then they ask him to calculate the following for the project. So to find out the accounting rate of return, it's average profit divided by average investment into 100%. And here to find out the average investment, the initial investment is 900,000 and the residual value is 100,000. So you have to add both initial investment value and the disposal value at the end of the investment and then divided by 2. So your average investment is 500 and here the average, if it is given directly, then you can find out accounted rate of return as 40%. And in first years to find out cash flow, the difference between profit and cash flow is only depreciation. So cost minus residual value divided by useful life, then you can find out depreciation for the year. And profit plus depreciation, your cash flow is 360. Then payback period divided by annual net cash flow, you can find out payback period, right, as 2.5 years. So I already uploaded first paper discussion from 2019 up to 2024. So if you learn at least one word or any equation or any formula, just comment that and then please share with your friends. And there are a lot of workbooks for English medium as well from my Sihina publications. You can purchase those from me. So yes, and again I am doing classes for 2026 A levels as in group class and the online class as well. So you can join those to those as well. So we will meet from another theory part or with some questions. So until that, goodbye and have a nice day.